Okay, so here's a recording of the AM macro. So I was watching this first presentation gap and I was hoping to see it deliver towards the 19,749.5 level. That level there is a daily low, it's an intermediate term low. And I noted in my Notion, which I will showcase at the end of this, that I wanted to see this low taken as a part of an accumulation scheme that would occur the 2 days prior the Wednesday FOMC news release. So, in the sense that those days would be dedicated to manipulating people into shorts for Wednesday to expand higher. As you can see, I have the notations down now, and I have to 10 a.m. macro. And here I was trying to pull up the daily chart so I could show you the low on a daily time frame, but for some reason my NQM 2025 and the other NQM 2025 are not synced. As you can see that there's different drawings. The drawings that I have on the left chart are not the same on the right chart. I'm not sure what the problem is. Been encountering this for a while now, but if anyone knows a solution, please do let me know. The objects are not synced. Anyway, here we're around 2.5 months into the AM macro. We're heading towards below. Notice how the 9:49 a.m. candle inversed, or sorry, the 9:47 a.m. candle inversed the first presentation gap, but then it only started delivering when we began the macro. And now it's starting to slow down. The previous candle was a consolidation candle. This is obviously following the quick price action that we had prior to that. There, we started to pick up some speed. And if I remember correctly, I think it'll get hit now. Yeah, here's a chart with all of my drawings, my new ones. That's the size I put it here in the above. That's the road I was hoping that would get taken. And yeah, it's important for me to keep recapping what the main objective that I am hoping for or that I'm speculating. Keeps my picture in my mind, keeps me having a sense of direction in the markets where it's easy to get lost. And there it wicks through the two-minute low, and that's it purged. There I draw on the standard deviation of the manipulation neck that led up to this move lower. The 0.5 level was a area of interest in the sense where it could move down to touch the 0.5 level, but it is not absolutely necessary. And we can look for reasons why it would want to do that. You're not demanding that it does go there. You're not saying it's absolutely necessary that it hits the 0.5 level standard deviation. You're just saying that that's how far it may sink beneath the intermediate term low. And you can start to reject higher like it did. But you'd always want to make sure that it's going to reject higher before stopping the anticipation of the 0.5 level. Right. Here I started to speed up the video a little bit. So basically, um, I drew out the levels of that wick there because I was kind of expecting and had the idea that price would reach up into the imbalances on the right side and then go back and reclaim the discount wick as a discount wick again, and then use its consequent encroachment level to deliver to the 0.5 level. But as you can see, we fell short of the 0.5 and just started to move lower a little bit off the 0.25, and we fell short of the consequent encroachment level, and we pushed through the half level, and that's where I kind of threw away the idea that we were gonna reject lower off of the consequent encroachment level. Here is my Notion URL, Tuesday 5/6/2025. Today may I reach into the sell side pool to get fire up during Wednesday for the FOMC statement. This is the pool that we had highlighted on the 1 minute chart. With the purpose of limit sellers beneath and towards the low. So I was expecting that this run lower here and that the sweep on this low would accumulate sell orders, engaging pending sell orders beneath this low and introducing new short sellers above these swing highs. Let's see if the inverse of the first balance sticks is there. This was when it was first formed. Then, as it was inversed, it took us towards that low.